Does it say we're live? YouTube, I guess I am live. All right. Well, we're live. Let's get all this stuff out the way. Well, that was weird. Took a minute. All right, welcome everyone. We'll get rolling here in a minute. Or two, or three. Don't forget your shirt. Was I not wearing a shirt? I don't know. Huh. All right, should be up and running now. Let me know in la chat if we're up and running. All right, are we good? Woo woo! Because my YouTube is. Oh, there we go. I am up and running. All right, let's get to it. Good morning, good morning. I have my assistant starting in 2 weeks, and then hopefully in the next few days, my trade analyst is starting. So that will be good. Finally have some people helping me. All right, good morning, good morning. And let me check one last thing, and we'll get rolling here. An eBay message. Oh, okay. All right. So, why is the market down, gang? Anyone want to do a little investigating for me? Why do y'all think the market's down? Why so? Why is the market down? Why would the market be down? All right. Sorry, I got to do this last mail message. Yep, so market is down, not because of, you're probably going to see political stuff or tariffs, Trump, blah, blah, blah. Market's down because what did it do yesterday? And then we'll get into the, so why is the market down? Well, where did we go yesterday? Here's a chart of the Qs. And what did most people do yesterday? They bought. So one thing, and I already have it drawn here. So we rallied back to yesterday's high. So where would be the most pain, right? Down. Did I think we'd gap down overnight? Not necessarily, but the most pain right now is to the downside. If you recall, and I will call people out on this because I got all the Telegram messages last night. What were people doing yesterday? Yes, stocks are up. Woohoo! Yay! If we get another bounce, the bottom's in. Yay! This is a great rally. Well, the max pain, right, is to the downside. So the more of the human emotion where you have people saying, yes, ups, yes, the roller coaster, eventually those weak hands will puke out. And then two things. They get blown out, or they don't have any more money, or they can't take the stock market anymore. So usually that will happen to newer folks who haven't seen bear markets or a VIX over 20, again, is nothing. Like a VIX over 20, you have to figure, that used to be very common. Like VIX over 20, 20 to 40 was the range. So this VIX over 20, I mean, it's nothing, right? So the max pain was right to yesterday's low, right? So everyone who bought yesterday, what's happening? That's going to happen today? They're going to sell. They're going to get stopped out. And if we start taking out, let's just say we get back into this range in the NASDAQ, so pretty much right here. I mean, personally, markets usually don't bottom on Fridays. We could have a margin call Monday. But I would say trade cheap options. Don't do anything too crazy today if you want to trade. Don't put on positions in like Microsoft, right? Look at Microsoft, right? So yesterday, big rally. Yes, it's safe. The stock's going to go up to 420. And then today, you just puke again. So a lot of it is the human emotion level. All the stuff that you hear about tariffs and the Fed and chicken wings and, interest rates, all that jazz. That's just a cover-up of the real human emotion of the market, right? That doesn't, that's what they want you to say how the market's reacting. But really, it's where are the buyers and sellers, and where's the most pain? Bonds are interesting though, because bonds are down, and gold is down. The yen is up, so this is a huge red flag. If you are probably new to markets, or maybe no one's mentioned this to you, but the Japanese yen, if you look at 6J, it's the future contract. 6J, here, let me write it easy. 6J. When the yen goes up, stock market goes down. So the yen has an inverse relationship. It's actually a trading product for it is the FXY. And look at that thing starting to break out. So most people say, buy the VIX, all that jazz. The yen actually is one of the best products because look at the options, how cheap they are. And these are April calls. You can buy April at the money calls for $1.20 compared to the VIX. The VIX is probably the worst instrument to trade unless you do call spreads on it. But, the options don't move in the VIX, right? So look at the FXY or 6J for the yen futures. Much better instrument to hedge. So when the yen goes up, equity markets go down. And that is, definitely a big red flag. You wake up to a big bid up yen. If intraday we start having the yen fall, you could have the stock market rally. So what I would do, because I can only speak for myself, is keep the yen up on a chart with maybe, the NASDAQ, the NYSE trend, all that jazz, right? So maybe when you're doing your charts, you keep the ticks up, the trend up, the yen up, and maybe even the ADD line up. You could look at the VIX, but I don't think it's a good instrument personally. So does that make sense? Does anyone follow the yen or know about that? If you don't, maybe learn something. And this is, I am not a boring kind of guy. Like I usually don't talk about these boring things. I'm full risk on, but they are good to know. And, especially for, if you're new and really wanting to learn about the equity markets. Especially, I used to trade futures a lot, so that used to be my whole fun in the sun. China ADRs. We mentioned yesterday on the Platform X, Miss Becky, Beke. What's happening in China? Vertical. K-Web, Becky, PDD. These stocks are just on a tear to the upside. PDD up another 2.5. Baba bid up this morning, about $2. Miss Becky's up. actually a little, was up a buck, now only up about 20 cents. But all the China ADRs, look at this. K-Web yesterday, breaking out on Platform X, long signal. FXI, breaking out, right? Near its 52-week high. So the China ADRs, they do not care. The Asher moving up, they don't care what the U.S. equity market is doing. So that's a very good bright point. Also, too, if anyone was keeping an eye on the trend, I have a market eternal sheet somewhere. I don't know where it's at. Maybe Deanna will, or if we have anyone in the chat. Another kind of red flag yesterday was the trend was right around 0.6. When we have the trend at an extreme level, 0.6, it has to go up. When the trend index goes up, it's $, TRIN. What's going to happen? Usually the stock market goes down. So it moves inverse. If you have a trend above 2, usually will go down. S&P will go up. So just a little thing to help with the overnight gaps because we are starting to see them. Hopefully you all made money in XSP yesterday. I started selling those at 23, 25, and 29 cents. So again, if you want to do it today, I'll cover it very quickly. And you can do this every day, especially right now with all the volatility. It's very, very friendly for us. So what you can do, very simple. And I think some brokers has it as XSP with a $. Some brokers have, if I'm not mistaken. You know what I'm going to do? Make it real big and easy on everyone. Watch this. Because some of y'all have bad eyes, like me. So I'm going to make the font size larger. Oh, wow. Look at that. Ooh, big eyes. All right, so here's how you do the trade. Here's how you do the trade. And it's very, very simple. Don't be doing no calendar, diagonal, call, butterfly stuff. Don't be doing any of that stuff. Here's how to do. Very simple. And there's tax benefits, by the way, for it. Just Google SP or mini SMPX tax benefits. And, obviously do your own research. I'm not a CPA. But way better tax benefits than trading the SPY. You're taxed at a better rate. Same with futures. So let's just say we're at 584 on XSP. If you want, you could do an SMPY, but you're not going to get the tax benefits. So the market maker implied move is $4. So we take $4 out the equation. So that gives us 580 as a downside target. Now, all I'm looking at is the options that expire today, March 6th. Why? Well, the market's already made a big move lower, right? So kind of what you want, right? So let's go ahead and sell the 580 puts and buy the 579 puts. So let's be a put vertical or a bull put spread. Not a bear, bull. Why? Because usually puts are more expensive because puts are insurance. So we go to the 580 puts. You can sell them for about 420-ish. Buy the 579 puts. What in the world? Wait, hold on. Why is the premium so high? Wait. Did I find a little hack? $0.58? There's no way. The 570, what? Oh, I'm slamming these. I'm going to do the 577. Am I looking at this right? I could get 40 cents. Hold on, I got to see if this is a real fill. Okay, maybe it's not because I'm not getting filled. Hold on. I gotta see if I can get filled in this. I can sell the 576 puts and buy the 575 and get 38 cents. 37 cents, I'll be happy. Hold on. I gotta see if this is real. Because if it is, I'm gonna be. Right? I should be getting 50, 40 cents. Maybe it's not. Okay, something must be up because the premiums are too high. So I don't know what they're doing now. It trades pre-market. It trades pre-market. Hold on. Is there contracts trading on this? Or are we like in a down period? Because these premiums are way too high. These premiums are way too juicy. $30. Yeah, something must be going on because these premiums are too juicy. Yeah, all right. I knew it was too good to be true. All right. Something must be going on because these premiums are too juicy. Yeah, I know, but I can't get filled. I'm trying to sell the 576 puts, buy the 575 puts. Yeah, something is spoofing. I'm even going below the market. Yeah. All right, we're gonna have to wait till the open probably. Wow, I know it's too good to be true. Can the Qs? Let me try a different instrument. How's SPX, the big boys? So SPX is implying downside protection to 5,800. The only reason I don't like SPX. Wow, that's juicy too. Hold on, I gotta see if these prints are real. I'm just more curious for my own sake than anything else at the moment. Yeah, something's going on. Because it's giving me even money on a bull put credit spread. Yes, I guess something's going on. Because there's no way it's giving me even money on a credit spread that's $40 out the money. And I'm way below the market. Yeah, all right. Well, we'll just do it at the open. Wow. That is wow. Because yesterday we were fine. How do you fix it? You don't need to fix it. Don't look at it. You got time on your side. If you need to fix it, you could just buy it back at a higher price. But, if you really want my opinion on that, never use stop losses. Only losers use stop losses. But you never really, when you trade options, you already have, they're limited risk instruments unless you're doing naked options or like calendars or diagonals, which I recommend nobody do. When you already do an option, you already have limited risk. So there's really no need. When you do like a call spread or buy an outright call, you really don't need a stop loss. Stop losses are, if you're doing like $10 options that expire in 3 months and the option goes from 10 to $5, yeah, then maybe, but again, I personally just wouldn't trade options if you're using stop losses. You should trade cheap options. I can't tell you how many times an option I bought for $1 went to a quarter, and then it went up to $5 or something crazy like that. So I just never use stop losses. They're, horrible, horrible. I know all like the books and all the people will tell you use a protective stop loss and all that jazz, but unless like the stock gets downgraded and is just gone, I rarely ever use them. People use them too to make their trade trackers look good, but I don't. I'd rather have them go to zero. Let's look at some put buying. RPD had some bearish put buying yesterday. That one's had some repeat put buying. Maybe one to keep an eye out for. Why? Odd stock. Never hear of it too often. But we saw some May, November, and August bear put buying and RPD. RPD put buying. So let's take a look at that one. Well, makes sense, doesn't it? Look at the daily, weekly, monthly. Pretty bad, huh? So I would say the put buyers have been, pretty spot on, haven't they? They started buying puts in mid-February 18th. So right here. And the stock has gone from 35 to 28. So they've been pretty good. So maybe a name to look at today. You don't have it. Let's see what else we have hitting the big boy scanner. Oh, one thing I do want to look at is that Marvel put buyer that came in late in the day. That rat bastard, I tell you. Where was that Marvel guy? This Marvel put buyer came. There he is. The weekly 72 puts. That guy, man, Marvel's getting crushed. So that's not going to help either. Big stocks like Marvel is down $15. MDB crushed as well, down 50. Internet software company. So these are like huge, massive moves to the downside. You just had, what was that one? WDC. This one just fell massively too on the other day. Yeah, right here. So if you're like, hey, NVIDIA's great. Oh yeah, did anyone see that NVIDIA buyer yesterday? That put buyer in NVIDIA? How good was their timing? This was a big trade. Graham messaged me saying, this NVIDIA put buyer, what an idiot. 11.3 million in deep in the money NVIDIA puts, the 134s for the end of March. Let's go ahead and send Graham a message of how bad he was, shall we? He's been very, very wrong. Very, very wrong. $11.3 million deep in the money puts they bought yesterday. Why do I like them? Well, A, the stock is down $4 today, so it's crushed. But 134 puts, look how deep in the money they were, right? With the stock around like 117. That's exactly what you want to see, deep in the money puts. So someone's not only bearish, but they're saying, I'm not taking risk. I'm not doing out the money speculative puts. I'm basically doing a short stock replacement. That's what those deep in the money puts are. So I really like that trade in that NVIDIA put buyer. So if NVIDIA goes down, what's going to happen to chips, right? There is a lot of gamma exposure to the downside in XSP. Gang, did we really... What is gamma exposure? Come on now. Come on. Do we really even need to talk about that kind of stuff? Come on. Let's be real. Does that have any role in anything? No, not at all. Not at all. There's a gamma squeeze to the upside. right? But all that other stuff is, I can't say anything but come on. Let's try to use, some market knowledge, we'll say, out there. But yeah, I got to be nice because, I got a lot of people behind the scenes and I can't say my thoughts fully, but, we stick to the real market. We'll say that. We'll stick to the real market dynamics. So nothing, no stuff like that. I'm trying to hold my tongue here, but yes, lots of downside today. So everyone's going to get stopped out. Probably look for the morning lows to get triggered. So basically, I'll look at something like this. Look for these morning lows to get hit. Once they get hit, if you want to get speculative long, feel free. But do cheap options, short-dated stuff. Keep an eye on the market eternals. Keep an eye on the yen. S&P futures are almost here. So look for all these buyers yesterday to get stopped out. So that will probably happen in the first 15 minutes of the day. If that happens, I would say you have a green light to get long. The only reason why I'm saying if you want to, that's fine. Buy the dips and do cheap options. The only kind of hesitation I have is markets usually don't bottom on Fridays. So my fear is we do another one of these. Everyone gets stopped out this morning. Then we rally. People chase, the rally. And then we have margin call Monday. So I'm a little defensive still. But I think if you want to get speculative and start building positions, I think you can. Just be prepared to add over the next 2 days. So if you want to start building, I'll probably buy more lunar today. I sold some yesterday on the rally. And I'll probably buy some more calls today. But I would be cautious. Scale in. So pepper in. If you usually buy, let's say, 10 contracts, maybe buy 5. Then you can add 3. And then if the market goes down, you can add 2 more. I would scale in something like that. I wouldn't be doing a 100 lot all at once. I'd be doing a 20 lot, 20 lot, 20 lot, 20 lot, and build into positions that you like. So don't get too frisky. Market's about to open. What about Gilead and CFLT? I think you're stick to the girl you brought to the prom. And Gilead is up again today. Oh my God. CFLT should be a little lower. I think you can add if market really pulls back to it though. It had about a 9% rally yesterday. All right, I gotta go. I got fulfillment to do and all that other jazz. Adios. Yay, yay, yay. Like, subscribe, leave a comment. Join the Telegram. Call the number.